Hey, what is up guys? John Fibonacci here. Welcome to my YouTube channel. This is Fibonacci Logic episode 1. If you could also go ahead and subscribe, hit the notification button so you can see when future videos come out, I would appreciate it, and go ahead and give it a like as well. And at the end, let me know what you think in the comments. Alright, so today is October 8th, 2020. It's a little bit after the day has been closed. And we're going to take a look at cable, right? GBPUSD. So it is going to be pretty much Fibonacci today. We're going to go over one extra concept, I guess, if you will. But ultimately, we're going to be looking at the logical use of the Fibonacci retracement tool. All right. So here's British pound on a 5-minute time frame, and I want to kind of study and look at what happened during the London session for today, and I guess we could take a look at New York as well. So let's just go ahead and get right into it. So if we look, actually I gotta warp it a little bit, give me just a second. So if we notice that the market from yesterday's close pretty much all the way until about an hour and a half after London, we can see that British pound was on an uptrend, but I was actually looking for shorts. And believe it or not, I did set a pending order on EURUSD, and I didn't get filled, and I missed out. So there you go. But nonetheless, British pound did give us some pretty unique opportunities, and we'll get into that in just a second. So market is on an uptrend, right? We have higher highs, higher lows, and we can see that. But I was actually looking for shorting opportunities, and just like in one of the other videos, we came to the conclusion that EURUSD and GBPUSD were both getting ready to reverse during the London session. All right, so there's a little bit of correlation in there, and that's one of the reasons why I was looking to short. Okay, but nonetheless, I'm gonna mark London. Okay, so right here, right at 2 o'clock in the morning Central, is London for me, and then price makes a low, comes up, creates these highs, and then comes down, and the candles start closing below. All right, so most traders would look at this, right, the bodies here to the bodies lower here, and they would look at that as a break of structure. So typically what you would do is draw your fib from the high to the low, and then you would look to short, you know, the 50.618% or even the 786. So let's just assume for a second that we were shorting the 50 or shorting that 618%. Okay, it's obvious in this scenario that the market went higher and would have stopped us out if we put our stop loss just above the previous high. So why does that happen, right? And this is why you don't just draw Fibonacci on every single high and low. All right, why did the market come all the way to this point here? Well, we got to do a little bit of I don't even know what the right term is for it, but basically what we're going to do is look at a retail pattern, actually. So we're going to be looking today at the double top, which I don't trade, but I do like to look for because it's the exploitation of pretty much retail traders and things like that. I'm not going to get too deep into the specifics, but pretty much in this scenario, when we're looking at this of what I just showed you, okay, this in a way is a double top, right? And why would I say that? Well, if you look at a line chart, okay, it's actually pretty spot on, okay, meaning that, let me see, you have the high, right? And so that right there is your double top formation. Okay, so that double top formation, you know, traders on the 5-minute time frame, because you know day traders look at small time frame, they're seeing that double top and they're looking to short probably on that breakout or even on the retracement like I just showed you, right? And their stop is going to be above the quote unquote double top, right? And that's why I don't short double tops, okay? So that's why the market pushed through. So basically that liquidity up here in the form of stop losses or even buy stops, technically it'd be the same thing. If traders are short here, they're going to have their stop loss up here, which in turn would be a buy stop. All right, but nonetheless, you have those, and then also buy stops to catch price going higher if this were to break out. And I don't trade that either, and I'm actually going to make a separate video on that, so stay tuned for that. So nonetheless, that's why the market did that, and this is classic market manipulation. And if you haven't seen that video, do banks manipulate price or something like that, you should go watch that one as well. And there you go. So once the market pretty much manipulated price here, then we can start looking for retracements. Okay, so that's why that one lost. And even if you took that short and lost, that's okay. Small loss, because I'm about to show you a much bigger win. Okay, so moving forward, this low is set here. I wouldn't consider this a break of structure. I guess this would kind of be a low, not really. But nonetheless, pretty much the liquidity was absorbed here. Market showing you a willingness to go lower, right? You have consecutive down candles here, and then that retracement. Okay, so this retracement on the upside, and you can even see that price is beginning to struggle here as well. Looking at those three candles right in there, you can see that every time it comes up, it comes right back down again. So price is struggling at whatever level this is, 29.60, 29.61, whatever, that's fine. So, but anyways, Fibonacci from the high down to the low. Now we can begin to start looking for that retracement at the 50% or that 61.8%, possibly the 786 if it goes that deep. So scenario, or the best scenario would have been a 618, obviously, because this is hindsight, but assuming that we just got in early at the 50%, and then your stop loss can go at the high because that liquidity's already been taken. So I doubt that there would be any more liquidity up here enough for the market to come up and grab those stop losses. So since we already grabbed stops over here, what reason would they go for stops again? Now, it does happen. There are instances where it'll run stops twice. Rather uncommon for me. I usually don't see that often. That could be because maybe I don't look for it that often, or maybe that's just how the markets work, but nonetheless, I just don't see it happen that often. So what I just showed you is kind of what I rely on, right? If that liquidity is taken, then I assume there's no more to be taken. So then we can short 56.18%. Okay? So then that's when the market really screams lower. And, well, there you go. Beautiful shorting opportunity in there. Not really going to discuss any type of profit-taking levels, but, if the market's making a new low right here or even a new low right here, it would be ideal to either take some off the table, right, taking partials. We've made videos about that already, the importance of taking partials and the importance of taking partials part 2. Okay, that's already been put out for you. Or maybe you took out the whole trade right there and just kind of watch the market go lower without you in it. I mean, it kind of sucks, but at least you had a profitable trade. All right. But nonetheless, market comes down for the next couple of hours before it reverses again. So that was pretty much the trade that I was looking for on Euro. Wasn't able to get that, and it is what it is. But anyways, so we'll continue a little bit more with the logic of the Fibonacci levels. So market makes that low, makes a high, doesn't make a higher high just yet, makes a retracement. This would be a higher high, right? Bodies here to bodies here. So if you took a fib from the low to the high, market comes down to the 50, even the 618, almost to that 786, doesn't exactly get there, comes down in there twice, and then rallies higher. So there's actually a lot of different Fibonacci's that you could have drawn here. This to me is like the bigger one. You have a high right here, and then another high here that breaks this previous high. So if you wanted to, you could draw the fib from this low to that high, right? Because this is the low that led to the high being broken here, and then a retracement down to that 618 or 786. That would have been ideal as well, and then market rallies again. With that low here, you could draw that fib from the low up to this high, because this high was broken with this high, right? Again, market comes down to the 618, even to the 786. So if you had bought this, maybe you took a little bit of drawdown before the market continues higher again. Very interesting. There's these bodies here, and then these bodies here, so that high gets broken. So you could draw the fib from that low to this high, and then a 50% right there. Okay, and then the market rallies again. So after all this type of movement, and then now you're heading into pretty much lunchtime over in here somewhere around 11, 12 o'clock Central, and then the market kind of just doesn't really do much until the end of the day. And then I don't know if this move is real or if that's just because of spread or what. I'm actually not too sure, but I wouldn't be too worried about it. But nonetheless, opportunities to short, opportunities to buy, and that's pretty much it. So I'll go ahead and pull up the EURUSD. Okay, so this is that same scenario that I was looking for. You had London open here. The market broke this structure, right? You had these lows, and then the bodies are closing lower. So what I did is I had a fib from the high to the low. And what I essentially tried to do was short the 50% in here, something like that. Market wasn't able to get there, and then continued lower. So I ended up not taking a trade on that, and it is what it is. So that is pretty much going to cover it for today. Yeah, so hope you learned something. Please give me a like and let me know what you think in the comments, and I will see you in the next video.